Joining us now on New Year's Day is Peter McGuire, CEO at XM Australia. Peter, good morning. Thank you very much indeed for joining us despite perhaps the overnight New Year celebrations. And here's wishing you a brilliant 2025 from all of us at CNBC-TV18.
Thank you very much, Latha, and to the same to everyone there. It's a special place in my heart, you and certainly the CNBC team, Manisha, Reema. It's a pleasure to join you, and sorry about the cricket. We're 2-1, but let's say in the last test, it might be 2-2. So there we go, and Happy New Year.
Oh, thank you. We have put behind a 2024, which has not at all been kind to cricket fans, but more on that on another day. You can bring tears to my eyes. Well, perhaps a new guard is waiting in the wings, and the old guard will have to make way. More on that later. Tell us about, just about every commodity. First, let's start with crude. Are the big days over? I mean, China officially said that they have peaked off in terms of energy usage. So do you think that's, for an importing country like India, it's one worry less? We won't see it go beyond, say, $74, $75?
Well, I think a lot of things working through what we saw in 24 and building on what Manisha mentioned. In 25, I think we've got the President Trump presidency and what he's going to do as far as production. China, and as you mentioned, are they at the top end as far as consumption? What's going on from a global demand picture? Are we going to also see further strip outs as far as geopolitical tensions, Latha, and building that into the market? And then you've got the mighty king dollar running at 108. I mean, the price of the US dollar at the moment, 108.50 for the US dollar index. So stronger dollar, traditionally cheaper commodities. So that's the storyline at the moment.
So Peter, on the dollar first, where do we go from here, at least over the near term, to your mind, and what would be the key factors determining that direction?
Well, good to see you, Reema. Happy New Year. I think
Happy New Year.
Thank you. A couple of things. Has the US dollar got the potential to hit a 110 handle? Now it's at 108.50. It's been an enormous trade to the upside, US dollar against everything. The Aussie dollar's been crushed. You've got a 103 handle for euro. You've got a yen sitting at the best part of 158, 157. So do we see intervention from Bank of Japan? And I think that the overall trend at the moment, there might be a 25 basis point cut by the Fed in May. So I think the dollar's going to build over the next month or two. And I won't be surprised to take a 110 handle out for the US dollar and maybe even parity against the euro.
Okay. Parity against the euro. Okay. I think euro fell 8% this year. I think yen fell about 11%. So, yes, it has been a period of dollar strength, but you think 110 is possible. But then it peaks off, you think? I mean, could we see it a sharp retracement? Or because Trump looks like such a binary event, would it peak off and fall substantially from there or just remain strong for 25?
I want to see, Latha, I want to see how President Trump, I mean, the first 90 days, like anyone, a new CEO coming in, a new board coming in, he's got it's hard to keep up with what he's actually doing because there's so many moving parts to this. And as the chart tells the story, you've seen that yen. So there's been incredible volatility across the whole currency complex over 24. And I think you're going to see a build in the sense of US dollar because if you're not seeing a rate cut, and that's what they're penciling in, being in May for 25 basis points, then I feel as though it's going to be one-way traffic for US dollar, at least for the first quarter. So strap yourself in. I think it's going to be volatile, and I don't think it's going to be short of surprises.
Okay. Well, actually, the rupee has fallen the least. Just a word more. Yes. Peter, I wanted to ask you about base metals. I mean, that impacts us the most. So will the Chinese disinflation keep base metals cheaper? I mean, if you can tell us, copper, aluminum in particular.
Well, if I look at, first off, the likes of iron ore, Latha, you're running at $100 a tonne, which is very, very soft pricing when you're thinking of what it was, that 180 level. Copper at about 87.50 at the moment. Aluminium's had a bit of a run up, and so is zinc, and so is tin. So we've just got to see, again, the appetite coming from China. You've got to see internal demand and, of course, the global demand for these finished goods. Are we going to see what's going to happen as far as tariffs being introduced? President Trump's key mantra is tariffs. So what impact is that going to have to the likes of China exporting all of these metal-ended products across certainly to the US and certainly across the world?
What about crude prices, Peter? In 2024, we saw Brent crude prices slide close to about 4 to 5% on the back of weak Chinese demand, which weighed on the oil demand. For 2025, at least in the first half, what is your forecast?
I think it'll be softer from here. I think first off, again, dollar, unless you see something dramatic happen from a geopolitical standpoint. So if things were going to escalate, then that's an uncertainty that just wraps across the whole complex. But I think that as far as dollar up, crude prices softer, President Trump going to increase production. So where's that increasing production going to go into the market? It's going to be cheaper prices, one would think. So it's going to be good for consumption and good for the consumer. I don't know whether it's got a sub 60, but I feel as though the mid 60s are going to be the home for pretty much crude leading into the next.
That's a headline. Peter, coming from you, that's a headline. If it's going to be mid 60s. So your range, what would be your range and your average?
I think I've got to go to 65 as the starting point. I mean, you're at 71 for WTI at the moment. Latha, you're at 74 for Brent. But I think you're going to see softer prices. I feel as though the Trump administration wants softer prices. They want to cut in the sense of from an inflation standpoint and increase production. So that's going to be cheaper prices. Okay. The other side of it is, what does OPEC want to do as far as their maneuvering? And we've just got to work through that whole process. And that's why I'm saying the first 90 days are going to be critical to really review.
Got that. Softer prices. I like to hear that word. Because we are consumers. What about gold finally? That outstanding performance in the earlier part of the year of 2024, does that continue? What are your range and, again, an average?
Well, I wore the handkerchief for a reason. I think it was just extraordinary what we saw in 24. Manisha made reference to it as far as 26-odd%. It's just absolutely mind-blowing, and so is silver. So I feel as though that momentum will continue as far as there it is there. Boy, that's just incredible numbers. So you're going to see, again, I think 3,000 is going to be the strategic point. Gold is sitting at 26.50 at the moment. Silver's running at the best part of 29.25 an ounce US. So I feel as though silver's got to hit that $40 potentially in 2024. That's what 2025, I should say. That's what many analysts are calling. And of course, gold at 3,000. Let's see then. Let's hold our breath and just see whether it materializes. But I feel as though it will.
Okay,
Peter.
3,000.
Peter, thank you very much for joining us today. Wish you a very happy new year. And we'll be watching the next test very closely and cheering for India. Thank you once again.